Boeing is having its credit rating cut by S&P to one grade above junk status. The concern here being that you're looking at cash flows that will be under pressure on two fronts, really. First of all, we know about the 737 MAX, which Boeing believes will be ungrounded by the middle of this year, potentially freeing up deliveries to begin maybe in the third quarter or early in the fourth quarter. We've known about that for some time. But the other issue that has really come to the forefront over the last month has been what happens to airline customers who have ordered aircraft. And now, because of their finances being under pressure as people around the world cancel flights and generally do less flying, are airline customers going to either defer deliveries, cancel deliveries, look for help from Boeing? That's a 1-2 punch that is hitting Boeing's cash flow potentially over the next 6 months to 9 months, and that's the reason why S&P has cut the credit rating on Boeing to one level above junk status.
Wow, I know they got hit by Fitch last week. Now that, Phil LeBeau on Boeing, thank you very much. Joining us now is Tim Seymour. Tim joining us by phone. There you are, Tim. It's good to see you again, my friend. Someday
nearby.
We will meet again in person.
Safely nearby.
This Boeing news, okay, obviously troubled for the equity. But again, and I don't want to sort of go too in the weeds, but you look at the stock and you see these companies that get their credit rating downgrade. You've got to watch these bond ETFs that can only hold certain percentages of either investment grade, right? Because if we see more companies get their credit rating cut, it could put more pressure on this little talked about side of the credit markets.
Well, this is a credit story. The market's a credit story now, Brian, as much as, and it's a confidence story and all the other things you've talked about. So let's get to the credit part of it. Boeing is a perfect example. They had north of $25 a share of free cash flow as little as a year ago. And now they're probably somewhere 3 times leveraged at this point. And this is the outlook, and this is the downgrade, and this is one of the biggest, most important companies in the world. So we talk about, and we have talked about this at different times in the market over the last couple of years. Debt to GDP, debt to EBITDA levels that are effectively, pretty scary, certainly for the economy on the GDP level. For many corporates, not so much. But you can see that the credit story and that huge tranche of BBB minus just above junk is something that, look, in a recession, that's what leads companies, obviously, to credit issues. And that's what the market is doing right now to companies that I don't think that the equity is really where the focus is.
What point does Boeing become a legendary long-term buying opportunity? 400 to 130.
Well, I would have said that before we started assessing the health of the airlines as buyers of the next plane as truly, the near-term issue. I would have said that this is a company that has certainly been through cycles before. Obviously, the plane, both production cycle and the ordering cycle, and then the order book are measured in years, not months. And this is a company that is historically well managed and certainly manages that process. So I'll let the airline analysts talk more about that. But I do think that Boeing, from a revenue side of the income statement, is something that people have to question differently in addition to the credit story.
Is there any move or any part of this market, Tim, that doesn't, I know a lot of it doesn't make sense because we don't know, but when you look at certain stocks, do you say, and I heard Jim, and Jim's going to pick up the coverage here in a few minutes, he said it on CNBC today, not all stocks are the same. It's not, things are going to come back. Is there any part of this move that you look at and go, that just doesn't make any sense at all?
Well, look, a lot of it doesn't make sense, but the market probably wasn't paying attention to what made sense on the way up. So, I mean, a company like Home Depot, let's get right to it, down 33% in a blink of an eye at a time when rates are low, where people are still, they may have job pressure tomorrow, but they still have a revolving credit line. And I do think that with rates where they are, this is a place where I think they're going to continue to see very strong sales. I mean, a Citibank, which is down 52% in 45 days or something like that, is again a company that is a money center bank who arguably their net interest income exposure is not extraordinary, but it is something where I think people are starting to question the credit story. I think there are companies like Amazon's out there saying, hey, we're gonna add 100 warehouse workers and delivery folks, 100,000 to their arsenal at a time where they're being opportunistic in a very difficult time. By the way, that's great news for Amazon. It's great news for Amazon shareholders. I think it's great news for the country. So I think these are the moments you need to be looking at companies that certainly can be opportunistic in this environment. There's no question as you go down your wish list, there's a number of companies in there that are, oh boy, I didn't think I was going to see it here yet. The credit story is something that's not going to give you a clear picture in the next couple days. And I think the policy response, while it's moved into overdrive in terms of the health dynamic, I think what we heard from G7 today, who do you have really confidence in right now around the world when you look at the policy leaders? And I think that's the big issue for the market.
Yeah, I mean, what we need is for a couple of days go by where all those graphs we're obsessed with now showing new cases start to roll over, right? I mean, when we start to see a rollover, and hopefully in Italy and in Spain and the United States, that may be the best part of the market. But I was focusing, Tim, on EA Sports and Activision Blizzard.
Right.
Those stocks down 14% in a week. I'm not advocating for the names, not my job. But all I hear about is everybody's going to be home needing something to do. These are sort of stay-at-home stocks. And by the way, electronic sports, esports, may pick up some of our viewing coverage.
Look, why not? Certainly, even before sports was scuttled, I think people were looking at sports and interactive gaming, interactive sports, betting along with sports. This is clearly a vertical that's extremely exciting. EA actually has been somewhat challenged over the last 18 months as an investment. The valuation coming into this was actually reasonably compelling. We've talked about media companies who need to make an acquisition in this space. Many will. And I do think that this is an exciting place to be. Look, online interactive gaming and esports are here. It's not even a question of that. That is media. And I think there's content around it that we'll probably see more. And that will come out of this as a secular trend that has been reasserted.